Okay, good morning. My name is Simon, Trading Perform Coaching, and we are going to jump into the webinar. I'm showing how I would have traded the account yesterday using the swing trades for scalping purposes primarily. If I had a small, or how I would have handled the swing trades if I had a small account. Small account being defined as someone who trades between, let's say, 2 to 4 contracts, right? And how I would have used the swings to put the odds more in my favor. And the reason for that is because when you have a small account, swing trading is very, very difficult unless you are disciplined or willing to size down. So let's go through the conflicts to start with. The conflict when you have a small account is you are trying to get that account as big as possible, as quickly as possible, right? Same time, you don't want to take a significant hit. I'm usually caught between two cross currents. If I have a new account and I'm at startup phase, or I have, or it's just a smaller account and I'm trying to grow it. And that conflict is, how can I grow it as quickly as possible and not take any dings, right? So the swing trade becomes very attractive, the stop becomes very unattractive, and I'm having the same consistent feedback that I'm getting from all of you, which is repeatedly when the stop is more than 5 points, people are passing on the number 4 entry, okay, which is the highest odds entry. People are skipping it, okay, but they're opting for the number 2 entry consistently, which is the higher risk trade, but because it generally has a smaller stop. And to me, it's backwards thinking, okay. And people who are trading decent, 4 and 5 contracts are making that same decision process, right? So let's go through yesterday, where it worked, where it failed, and also try to keep up with the math and see if that worked out, right? So yesterday morning, this is where we got the swing short, was on this bar right here. Let's see if we can open it up and step through it. So this was entry number 1 at the close of this bar, 1960. Oh, and there's one more element that goes in there. You have to remember, when I'm trying to figure out what my scale is going to be, I'm going to look at what the rotation size is in the market. I'm going to look at what the recent rotations have offered in terms of potential P&L, and then I'm going to look at, and then I'm going to try to make a judgment, with my goal usually being that I have 3 or 4 scales, depending on the market environment, to get half the trade off. And usually the way that I'm working that is, my first scale, let's say my first scale, in my case, well, let's just use a pretend hypothetical, right? Let's say I have 20 contracts to get off by halfway through, right? What I'm probably going to do is something effectively like this. On my first scale, I'm probably going to only scale maybe 3 or 4 contracts, right? Second scale, I'm probably going to be gone to 7 or 8 contracts. The third scale, I'm probably going to have 13 contracts off. And then when I get to that fourth scale, that number where I want 20 contracts off, I'm going to have my highest or hardest scale, either on the third scale or the fourth scale, where I'm out 7, right? What's the reason for that? I want to push as much as if I think I have a good trade and I think I have a realistic, whatever that fourth scale is, I think I have a realistic probability of getting there. Okay, so now let's rework that same scenario if I have 4 contracts, right? So all of a sudden, obviously 1, 2, 3, 4 to be rid of half does not work, right? The way that I would probably work that if I had 4 contracts is I'd look to be gone out of 2 of those contracts. The first one I'd probably take off at the second scale, meaning in yesterday's case, I think we had scales every 5 points, so 5 and 10. At 10, I'd probably try to stretch that scale to 10 points on the first one, or some hybrid in between there, right? A little bit past the first and a little bit in front of the second, right? The second contract I'm going to take off at that second scale, I'm going to be out. That's going to be it. There will be no 1, 2, 3, 4, right? So if I get to, if the target is 20 to be rid of half, I'm probably going to shoot for 5 or 6 on the first scale, on the first contract. And then if the target is to be at 20 points, right, I'm probably going to shoot for about 15 on that second scale. Why am I doing that? Because if I have a small account, it's devastating to have it come all the way back without getting my scales, right? So there's other ways to do it, right? You can say, well, Simon, I have a small account. I'm just going to shoot for, half of it off at 5 points, move my stop to break even. That's fine. But what you have to consider is what's the actual rotation size that's going through here. So let's look at it here. Obviously, I did not take a trade on number 1. I generally don't enter with the futures unless I'm incredibly clear as to which direction we're going, right? Now, first of all, yesterday got a little tricky because normally what we'd want, right, is for number one to print, have it stop and reverse back up and give us an entry at this point right here. Now, I don't remember how this next 5 minutes went, but let's say we just opened the next bar and went down. That would move our 50-60 retrace down to here. And actually, why don't we just go back here and look real quick at what this looked like. Let me open up a 1 minute chart. Well, it'll slow down too much. The point was entry 1 and entry 2 were almost identical here. But what was attractive about this trade, right? The fact was that the stop from this entry number 2 was sitting right here, 1 point above 1963.50, put it at 1964.50. The entry was roughly 1960 or 1960.50, somewhere in here. The stop ended up being roughly 4 points, right? Which is a small stop relative to the other swing trades we have. What's the problem with this? Okay, and you should have this in your trading journal, guys, that this is an aggressive trade, right? What's happening in the room, hold on a second here. Okay, I will, Brian, and I'm trying to do it, but as you know from our coaching sessions, it gets so complicated covering that I'm going to try to do that. What people are using to make this decision, guys, is not coming off a trade plan. That's the problem that's occurring here in talks that I'm having again and again. What people are doing is looking at the stop, and they're going, oh, 4.5 point stop, and they're not going, is entry 2 a valid stop for my trade plan? How do you determine if entry 2 is a valid stop, a valid entry for your trade plan? If you're willing to take it each and every time that trade number 2 comes up, or you're willing to take it 80% of the time, right? Unless there's some special circumstance, then it's a valid trade. But what's happening here is, so the trap point at this point was right here at this 1963.50, right? Let me get my drawing tool. So what's happening here is people are taking the trade right here. Their stop is right here. The trap point on this trade right now is right here. And what's happening is, and I said when we take the trade, if it comes up and stops me, right, and then the bar comes down and closes back in like this, I am going to take this trade. There's absolutely zero doubt in my mind that I'm going to take this trade again to try to get the shot to the downside, right? But that's not what's happening to a lot of people. They're taking this trade, they're seeing a 4.5 point stop. It doesn't come to an entry number 3, right? And it comes into a 4, and no one's taking entry, or many of y'all are skipping entry 4 or entry 3, which are the highest odds trades in this swing setup, right? And you're skipping them, right? And so what ends up happening is that you take the loss here, and then you're watching, which I'm going to show you in a minute, entries 3 and 4 pay huge dividends. And from a coaching standpoint, it's frustrating. And it's not frustrating from, I want you to do it my way. It's frustrating to see people lose. If I had a small account, I would not take entry 1 or 2, would not be on my menu at all. Entries 3 and 4 only would be in my menu. Or what I would be doing is once I had this swing short, I would start working key areas. Knowing that I have the swing short, I'm going to work Globex high is one valid area. Let's see if I can move this here real quick. Okay. Globex high. Once this fires, right, first thing I'm going to do is come down, look at my chart, and go, okay, 1972, 1974, key area. Globex high, key area. So if I'm a small, the other way to address this is to go, okay, I'm a small account, I'm going to start scalping. So where's my first opportunity? 50-60 retrace is my first opportunity. But here's what you can't bleed, and this is why it's important to have it. And I know I kind of spaced out on y'all there for a second, so I was trying to think it through. If I have a small account, I go, Simon, I absolutely cannot handle having a 4-point stop or 8-point stop or 10-point stop, but I'm going to start scalping in the direction, right? So I know, and why am I going to start scalping? Because I know if I get one of these key areas right and I can move my stop to break even, that I have a good chance of eventually catching a move down like this, right? So look at how the scalper handles this. He goes, okay, entry number 2, fired. 50-60, if you're a scalper, is a valid retrace, right? Comes down, comes up in this 50-60 area, and I think if we look on the 1 minute, it's killing me, so I got to go look. Let me go see it here real quick. 1 minute bar. Where were we yesterday? This is the morning. Okay, it was right in here. Let's see. What was the time on this? 9 a.m. Okay, there we go. It is 9 a.m. swing short fires, right? So that would have been, is that right? Where was the close of this bar? Let's get this straight. The close of the 9 a.m. bar, fine. Okay, so that is right here, right? So the first thing we're doing, okay, this was entry 1, this was entry 2, right? If I'm scalping it, I know that that bar is printed, right? And look, this took an entire minute. You had enough time to pull down your 50-60 retrace and see that we had popped into that 50 retrace there. Does everyone see that? I'm going to widen this out. Okay, came down, bar printed for swing short the next 2 minutes, right? Flies up into that 50-60 retrace, and then immediately comes down to a roughly 1956 and change, right? This is a move from 1962 to 1956. What is that? Let's say 1961 to 1956. That's 5 points in rotation, right? Did you have to be quick? Yes. But that's how you turn it into scalping. Now, I got to tell you something. Once you do this, you've got a trading decision to make in your trade plan. Do you take your 5 points and you're done? Do you take it? Let's say you had 2 contracts here, right? This is the way, or 4 contracts, the way I would handle it if I had a scalping mindset. And I realize I'm kind of jumping back and forth between the two, but I don't have a choice because I'm trying to show how to integrate both into one trade plan. You know you have the swing short. You know you have an aggressive entry point. You're a small account, okay? You take your entry here. If you have two contracts, you go, okay, I know that I'm shooting for 20-point rotations. I can shoot for 5 points. That's $250 a contract. Or I can shoot for 4 points, $200 a contract. Move my stop to break even on the second one. And if it slingshots down to 1946, I have a huge day, and that's great, right? And I probably would shoot to 10 points would probably be my second scalp if I had 2. 15 would be 3. In other words, 5, 10, 15. I'd be done with the scalp, right? If it comes back and tags me out, break even on the second balance, c'est la vie, that's it, right? The way I would handle this is different if I had, let's say, 100 contracts on, right? I'm going to scale at 5 points. I'm going to probably scale 15 contracts, take another 15 at 10, take another 15 at 5, until I'm down to half by the 4th scale, right? However I'm working it. But I'm much more relaxed. And why am I much more relaxed? And this is the distinction. By the way, we just opened, I think, guys. Why am I much more relaxed on this trade if I have a bigger account? 2 reasons. First of all, for the couple of times in the last couple of weeks where we've had 20 and 30 point swings, right? I've had size on to capture that swing, right? Sometimes I've had the entire second half of the trade still on at 25 and 30 points, right? It's a huge payday. If I had 2 contracts on that same trade, probably by point 15, I'm out, right? And that has to be, I know that has to be a recurring theme in people with smaller accounts or accounts that just started up fresh, is if you haven't had those big swings, it's very, very hard to stick around. So it doesn't matter if someone with a larger account is getting 30 points, because by the time you've gotten to 10 or 15, you're all done anyways, right? Even in a wide-ranging market, it's very, very hard for a small account to stick around. You just don't have enough inventory to work the scales on the way down, right? So the way I'm doing that, if I have a small account, I'm taking half at 5, moving stop to break even, crossing my fingers. You don't get smoked in that situation on this account. But the difference is if you're in the room, you have to make the distinction that I'm actually trying for that larger swing. You have to adapt. Now, here's where the next mistake comes. What people are trying to do, and I don't think that it works in my opinion, is they are trying to take that same trade. Let me get my pointer here. Why don't I have it? Okay, you're trying to take this same trade and you're going, oh, you know what I'm going to do? I'm going to cover here, right? Let's say I have 2 or 4. I'm going to cover it all here. Awesome, right? And I'm going to put it right back on here. No. You have to use the same entry points as I'm using for the swings. Why? Those are high odds entries. What people are doing psychologically, I wish I had a better way of explaining this, but I'm going to do my best. What they're doing psychologically is they're trying to merge both worlds. They're trying to go, well, I don't want to miss out on getting this payday, right? I don't want to suffer the consequences of having it coming back to me, but I also don't want to miss if it goes down to 0. And it's almost an impossible thing to get done. Okay, so the way to handle that is to simply make a decision and have it be a solid trade plan for a period of time. And if I were starting off and this were entry number 2, I would use entry number 2 as a scalp. I would probably be out of the whole trade. I wouldn't worry about the 20 points if I had a small account. Be out. Because why? What am I hoping for? I'm hoping for the highest odds shot. By the way, I'm monitoring, but we're nowhere close to even Globex low, and I'm not trading the first hour, so I'm not even worried about it. I'm monitoring it, but what I want is an entry 3 or 4. What does an entry 3 or 4 look like? Let's go through it again, right? Draw it through because people are still having trouble with it. Market pushes up, right? Big push up, swing down, swing short triggers. Entry 1 is where the swing short triggers. Entry 2 is at the 50-60. Entry 3 is at a support resistance level that's above and virgin, untested, right? And then entry 4 is the lock back down, right? What I want is entry 3 and entry 4, right? And really, especially if I have a small account, I want entry 3. Why is that? I want entry 3 because I know over here that I have a swing indicator that constantly generates 10 to 30 point ranges in this environment, right? And even outside of this environment, it constantly generates 10-point ranges when it's executed properly from position 3 and position 4. So all I'm going to do on position 2, if I take it, is quick scalp and done. If it goes to 0 off of position 2, I'm going to shrug my shoulders and not care. There, see, I'm ADD and dyslexic. It took me 20 minutes to figure out that idea. So now I got it. If I have a small account, I'm slower than everyone else, guys. I'm telling you, if I can figure this out, anyone can figure it out. If I have a small account, I'm not worried about entry number 2 for 2 reasons. First of all, if it's going to prevent me from taking the entry up here or the entry up here, I do not want to take entry number 2 because I'm going to screw myself out of the bigger and easier payday. Point number 1. Okay? If I do take number 2, I'm scalping it and I can't scalp it the same way Simon scalps it if I have a small account or a new account. Why? Because I'm not willing to get run over. Or probably more important and more truthful for most people is if I get stopped on entry number 2, I'm not going to take entry number 3 and I'm not going to take entry number 4. And that's a problem from a logic standpoint because entry 3 and 4 pay much bigger than number 2 do on a consistent basis. So hopefully that makes sense, guys. So before I continue, did that make sense to everybody? Anyone just give me a yes or a no, or I didn't explain that clearly? I know it took me 20 minutes to get to that idea, but that's what I was trying to communicate. Brian, did I hit that? Anyone? It's clear. Okay, great. Thank you. So now let's go back to the chart. That's not what I want to do. Okay. Next. So this is where the swing short fired. We had an entry number 2 here. I took entry number 2. I missed my scale by 2 ticks on this thing, by the way, guys. For whatever reason, I didn't get hit by 2 ticks. I took a stop. Okay, so the next thing I'm looking at is Globex high, right? Now, what's the reason I didn't take Globex high? Globex high was in the middle of a poorly auctioned area. But let's pretend like it wasn't in the middle of a poorly auctioned area, right? This effectively becomes an entry number 3. And again, all I'm focusing here on is if I had a new or small account. Even if I had $1 million in this new account, I don't want to take the $1 million and draw down to 900,000, right? If I have a $20,000 account, I don't want to draw down 10% to 2,000. I want to get cushion immediately. That means for me, I'm focusing on entries 3 or 4. The only reason we didn't take entry number 3 yesterday, this is an entry number 3, was in the middle of a poorly auctioned area. This completed the end of a poorly auctioned area. So this became the target. Otherwise, this would have been a fine place to enter, right? Even looking at that point of view, if I am scalping, right, and I want to show this here really quickly. If I am scalping, here, right, is my entry at 1968.75. We come right to it. I either take it right there and have a 2-point stop behind. Obviously, this rotated from 1968 down to 1964. Easy cover. However, here's how I'm changing it if I have a small account. Let's say I put on 2 contracts at 3 points or 4 points, whatever it is. Because it's a number 3 entry, I am taking my scale here, but I am moving my stop to net break even. Why? Because that lets me move my stop back over here, and if it comes and tags me, I have no loss. Being cognizant, you have to look up and down the field that this is the probable destination of where we're going to end up landing, right? Why? Because markets like to re-auction poorly auctioned areas. And for you guys that are in the room regularly, right? This was the beginning of the poorly auctioned area. This was the end. How did it go? We come up, we push out of the poorly auctioned area, which also happened to be an open gap, reject off of it, come halfway through, down, go all the way back up, complete through the auctioned area, and then continue on our way as we were before. So I would take a picture of that sequence and have it and look at it every single morning until I had it imprinted and tattooed in my mind. Just if you're a football fan, right? I know guys who are football fans, they know exactly what the plays look like before they set up. They know all the formations. They can see it and describe it. You should be able to describe this pattern to anybody in vivid detail and know exactly how it'll play out 70% of the time. And the answer to that question is, how does it play out? Exactly like we had it here yesterday. Rejection first time in, auction halfway through, come back down, backside test, complete the unauctioned area, turn around, reject, and come all the way through. So what's the reason why I'm leaving a trailer here, right? And I'm moving it to net break even instead of bagging my profit, even if I have a small account? Because there was a good chance that we were going to shoot straight down on this thing. Okay, let me get rid of this. Okay, let's go back to, I don't know why, but I definitely have a headache this morning. Okay, so then let's continue the picture. Finally, we get to the key area, right? We called in the room 1973.50, which I did not get a fill on, by the way, right? But had I gotten a fill and I had a small account, again, this is exactly how I would have handled it. So first of all, too many people are taking a stop on entry number 2 because it's 4.5 and not waiting for entry 3 or entry 4, which if I'm scalping, right, these are both entry 3s, entry 3, entry 3. Did I have a chance for a nice profit and still get stop break even? Yes. You have to execute this as if we're executing a series of motions, as if it were a ballet or a football play, right? Just like in a football player, if you're a lineman, you do your initial block, but if you know it's a pitch right and run, you're hitting your block, but then you're breaking away and you're breaking off to the right side and starting to move upfield so you can get your blocking assignments downfield, right? We know our ultimate target, once we have a swing short, you have to have etched in your mind that this eventually, right, if we have a swing short or swing long, that we have a chance of getting a play all the way down the field. Hold on a second. Okay, Mari, I'll try to, thank you, that's very good feedback. I'll try to do it. So Mari, had this not been in a poorly, Mari asked, and Mari, I'm just going to read his comments. It says it's clear, but as a small trader, I would like your specific entries for a small trader. My trade plan calls for entry 4, but I'm not certain some of the time exactly when this occurs. Okay, Mari, let me be totally clear. Okay, and I'm going to demonstrate it here, but I'm going to draw it out so that everyone can see it clearly. The market pushes up. Wrong color. Let's get a better color. There we go. Wow, they're all gray. Hold on a second here. There we go. Okay. Market pushes up, swings around, triggers right here at the bottom of this. This is entry 1. So Mario, I'm going to let you step me through. Is that totally clear to you where entry 1 is? Okay. We're then going to measure from the swing high to that swing low what the 50-60 is. Okay. Now, in perfect world, right, entry number 1 ends up being the swing low, and we get a perfect 50-60 back up. So this becomes your entry number 2. Is that clear? Okay. In real world, right, the way this works is come up, we swing down, and we never get the 50-60 retrace. The market kind of stutters, and then it might take another leg down. This causes confusion, right? What ends up happening is that the 50-60 retrace comes from here. Well, we never got the 50-60 retrace, so you have to continue to pull down to wherever the swing low ends up being. So now, many times, not always, instead of entry number 2 being higher than entry number 1, they end up being equal because the extension of the swing down comes up, and then this becomes entry number 2. Is that clear how that works? Okay, well, I want to be really clear, right? So we can't control, if I'm drawing a 50-60, right? Let's say this is point A, this is point B. I'm measuring from here down to here, right? And then number 2 will sit in the middle, right? However, if instead of hooking a U-turn, we come down, we never retrace specifically, we never tag the 50-60 so that point X moves down here. I now have to move my measure point down to here. So this 50-60 will now move lower, and it ends up effectively being equal to the number 1 or lower, right? When that occurs, okay, I realize that I'm not crazy about it. The whole idea about getting an entry number 2 is that it's higher than entry number 1, and therefore closing the gap, right, between my stop and my entry point. Otherwise, I would just take number 1 and be done with it, right? So the best entries on this trade, okay, are generally when we come up and hit an entry number 2 that is higher than entry number 1. Is that clear? And anyone who, okay, perfect. So let's erase this. We're still just floating in a tight range down 18. There's nothing for me to do here on the market, guys. And even if there was, I'm skipping the first hour. Let them do whatever they want to do with it. I don't like messing around with OTF when they're trading. Okay, so now let's continue. My next valid area of entry in this process, again, I'll draw down. Okay, so this was 1. This is 2, right? 50-60 retrace. Entry 3 becomes a zone that's untested and above, like this and like this. Here's our swing entry. Here was our number 2 entry. It was effectively the same thing. Stop 1 point above the swing high. This trade, without getting a scale, got completely stopped, right? Next entry, which I passed on because it was in the middle of a poorly auctioned area, right? This became my primary target, right? And then instead of taking the front of the zone like I should have taken, I kind of castigated myself for this. Castigado, it's Spanish. It doesn't translate correctly in English, but in Spanish it does. I hear my father saying it. Castigar. At any rate, I was upset with myself for this trade because I tried to get it perfect, and I should have just taken the front of the zone. But the point being, if I take it from here, I have a 2-point stop behind, right? So let's say in pretend land, since we can pretend here, I take this trade. Again, because I have this swing short, and in this current environment, I know I can have 10 to 20 points. So I'm going to shoot for 5 points. If I'm trading 2 contracts or 4 contracts, doesn't matter. I get to 5 points. Let's say I take half of it off. I now have 5 points per car that I can donate to the remaining 2 contracts, right? Thanks, Robert. Appreciate it. I can I have 5 points that I can now donate to these two contracts, right? What that means is if I entered at 1968.75, I can now add 5 for my net break even. That allows the market to push back above or some combination thereof. I can donate half of it, but I can move my average price back, right? Why am I doing that? Because I'm not worried about protecting the little 5 points that I already have, because I know there's 20 points on the table potentially, right? So erasing this. So from this point, right, if I have a small account, this is how I'm doing it. You have obviously you can run it any way you want. And let me tell you what the secret to this thing is. It's really, really important. It doesn't matter how you do it. What matters is you do it the same way every freaking time so that you can build consistency and a track record. If I'm taking number 3 and I target whatever I think the rotation is, let's say I think my stats tell me I have 99% odds of getting 5 points, and that's good enough for me, right? The stop is 2 points behind. That's a 2-to-1 RR. I'm totally happy with it. I'm going to take my whole trade off. But at that point, you're done. You've spent that trade right there. There's nothing left. People will sit here and go, well, I'm going to re-enter on the 50-60. They try to get all kinds of cute. I call it negotiating with the devil to make the trade work with a small account. However you do, even if you were going to do the 50-60, you just have to implement it so you do it the same way each and every time, because what we're trying to eliminate in all our methodologies is the thinking process that goes on here, because the thinking gets in the way of the trading. You should already know before we ever got here exactly what you were going to do, and that I should be able to look at your statements and look at the pattern and go, Mari, in your case, right? I should be able to look at your pattern and your account on an entry number 3 and go, every time Mari puts on 3 contracts at his scales will obviously vary depending on market, but let's just say pretend that we always had the same market. Let's say we had the same market. Every time I look at Mari's scale, let's say it was always 3 points, right? We have a fantasy market that never changes, right? Every time it's 3 points. So I'm going to look at Mari's account. I'm going to see every time Mari scales at 3, he puts on 3 contracts at the entry point. He scales off 2 at 3 points. He moves his stop to either break even or net break even every time, and then he trails down for 10 points on the 3rd contract if it hits. I should be able to look at his contract and see a repetitive, exact same play over and over and over again to the point where it becomes rote. The reason why that's important, Mari, is because you're no longer thinking and trying to figure out. I know you understand it, and I know you're a really smart guy. I know you get it, right? But in your account paperwork, it should look the same every time. Why is that important? Number 1, if we ask ourselves a question, what do I do this time, right? Well, our brains, as little as I understand about how our brains work, our brains are going to go out and go, hey, well, what could go wrong, right? We're going to ask, where should I place the stop and what could go wrong? Well, if you ask your brain what could go wrong with this trade, guarantee you your brain will come up with answers. I can come up with a million things that could go wrong, okay? Number 2, really, really critical. You're going to change most humans are not mechanized in their behavior. So odds are, if you don't have it written down what you're going to do and you don't do it repeatedly, it's probably going to look different each and every time. This is a problem because the market is variable. And if we can't fit, if we're variable and the market's variable, there's no way to figure out what's going wrong when things start going foobar. For example, if Mari uses a 2-point stop at entry number 3 every time, right? And he goes through 6 months of a high win rate, right? And then all of a sudden in month 7, he experiences 4 stops in a row, right? And he's going to sit there and go, well, what the hell's going wrong? I just had 4 stops. That hasn't happened in 6 months. So then that's going to, and Mari, and so the first thing I'm going to ask Mari is, well, Mari, show me how you take the entry. And he's going to go, every time I do A, B, C, and D as closely as possible, right? Okay. And you've been doing A, B, C, and D. Okay, we've eliminated immediately that Mari's doing something different each time. So now we can go look at the market, And then maybe the market rotations have gone from a 10-point rotation to a 30-point rotation. And all of a sudden, that 2-point stop behind the entry that was working so beautifully, we can go back and look at all of Mari's stops, right? And we go, Mari, what stop would we need to have made all those trades work? And Mari can do the calculation and go, I would have only gotten stopped on one of those 4 trades if I had a 3.25 point stop instead of a 2-point stop. Mari has now solved the problem of what's happening, which is the rotations increased, the whips increased, the market got thinner, and all he had to do was adjust his stop. He had to add another 1.25 of risk, and then he could have gone to the next logical question. He could have gone and done the math, because then he can look at this trade and goes, okay, because he hasn't changed anything else, we quickly identified that 3.25 stop would have kept him on 75% of his trades, right? And then on the one time that he did get stopped, so then the next natural question is, well, what would have you made on the other 3 trades, right? Well, we can calculate that. And Mari would have gone, oh, I would have still hit my 10, or I would have hit 15 points on average. We would have calculated MAE and MFE, maximum adverse excursion and maximum favorable excursion, okay? And Mari would have looked at his trading account and go, oh, look, I had to add a 1.25 to my stop, but my average maximum favorable excursion increased by 5 points. So now I can go, well, I don't need to capture all additional 5 points, but you know what? I can build in the 1.25 of extra risk into my target, and I see here that I would have hit that 100% of the time due to the increased volatility, or 90% of the time, or 80% of the time. And then instead of trying to hit that full 15 points, I would have been able to hit 11.25 of those 15 points, and it would have compensated me for the additional risk in the trade, and I would have survived instead of having 4 stops. Does that make sense, Mari? And to everyone else, really? Okay, hold on. I see someone Skyping me. Let me see if anyone has a question here. Jason. Okay, great. Thanks. Okay, so we arranged that. Now, we want to take it one step further. Okay? We want to do this analysis for every step of that 1, 2, 3, 4. Is that a lot of work? Yeah, it is. It's actually a pain in the ass, quite frankly. Okay? And I'm not a spreadsheet guy. I know my hair, I've already heard all the hat comments, and my hair is just, I didn't have any of my hair stuff. It's just a mess this morning. So the good side is I have hair. The bad side is it's out of control. So the point behind that is you want to do that analysis for each and every step. Entry number 1, right? How often does it work? How often does it give you scale 1, 2, 3, 4? What's the MAE? What's MFE? Entry number 2, how often does it work? What are the scales? This is how you determine if the trade's right for you or wrong for you, right? And also the third thing you want to keep in mind in all of this, right, is what is the stretch that we are on when these are occurring. Trade number 1, I promise you, looks different when we are on a 6-point stretch versus when we're on a 50-point stretch. Trade number 2 looks different. Trade number 3 and 4 look different on those stretches as well, right? I'm not going to get into that right now, but that's, you do want to note, some in your notes, market is up 78 points, right? ES, which is ridiculous, but we've had that on some days, I think, right? Or NQ's up, same thing on NQ. How much are we up or down, right? And go, okay, on this stretch in this market, on trade 1, 2, 3, 4, and obviously you're not going to be able to get it statistically to match up with the stretch, but eventually, if you keep noting it in your journal and in your trading sheets, you're going to start to notice, hey, trade number 1 works pretty damn well when we're up 30. Trade number 1 works pretty crappy when we're up 7. Trade number 2 works well when we're up 30. Doesn't work when we're only up 4. Trade 3 and 4, you're going to find in your journaling, once we get a swing short or swing long, outside of the first 30 minutes, trade 3 and 4 work pretty damn well a very high percentage of the time. And when I say high, over 70% of the time. And at times pushes to 80 and 90%. Okay? Moving on. I'm a trader over here. And this is an important factor. I took the trade here, 68, rolled all the way down to 63, right? Now, if I'm a small trader, this is what happens to me. I'm pumped, right? I just made 5 points on 2 contracts. That's $500. If my account, right, is 15K, I just made around, what is that, 7%, 6% of my account, right? It's a really good return. If you think about it in business, in a business sense, it's a great return. You're now thinking one or two things if you have a small account. You're thinking, hey, here's what happens. Hey, I can cover all of it here and I can get the 50, 60. You got stopped, right? You just gave it all back and you probably swung to a loss on that move, right? Or, and here's why I don't take the 50, 60, right? Or you're getting into a frantic mode, and this is where this is what small traders do. They get into what I call frantic mode, okay? Frantic mode is, I'm going to capture the 5, but then I'm going to get cute and negotiate and try to capture another 2 here and 1 here, and I'm going to dance in and out. And here's the reason why it doesn't work. It doesn't work because most people cannot shift their minds quick enough. If you're going to be a scalper, stay a scalper, right? Meaning, I'm going to trade in and out all day. But here's why small accounts blow up scalping. Because you cannot adjust to the constant variance that the scalp demands that you do. And you can't figure out how many times you should take the same area, right? My solution to that problem is fairly as elegant as I can make it. Take one area, one time, and let it pay you. Pretty simple, right? No problem, Mari. Thank you for letting me know. Take one area, one time, and be done with it. Take your pay, whatever it's going to be, and wait for the next setup. This calms your mind, keeps you focused, and lets you execute your trade plan and gives you time to go back to your trade plan and see that you're executing it properly, right? Which you can't do if you're trying to negotiate constantly every little tick. You're a frantic mess. Believe me, I try to do it in my career. It can be done. There are some people who are skilled at it. When I say that it can be done, it means that there's some people that can make it to the NFL and there's some people that can make it to the NBA. Most of us can't, right? Very skilled, highly skilled athletes can't. Most of us can only do 1 or 2 things really, really well. But it doesn't mean that you can't make a shitload of money trading. You just probably can't do it in a frenzied manner, right? Computers are better suited to doing that, which is why computers do it, okay? Moving on. This was entry number 3. Entry 3 never turned into, I want to draw everyone's attention back here for a second. Notice in this, entry number 4 is still right down here, okay? And entry, so we had 1, 2, 3, right? Which would have made this down here an entry number 4. But notice it never locked underneath here to give us an entry number 4. So, additionally, and I pointed this out in the room yesterday, this became the new entry number 4. I'm just going to move this chart here. Let me grab my pointer. There we go. Entry number 4 now moved up like that. Okay, 1967.50. Okay, and you'll notice that we came right down to it, but it did not close below. Okay, we then proceed. So, according to the way I would have done it, I would get stopped at break even on this trade. You don't have to do it that way, but that's how I would have gotten stopped. I would have used this for net break even at entry number 3 because I think it was very valuable to give us the push to the downside, right? We then push up. This now becomes my new, this was the old number 3. Okay, this is number 3. This is the new number 3. And I know someone in this room front run me yesterday by a tick and got filled. I did not get filled here. I was really pissed. I mean, I was as pissed as I get now. I mean, it's just whatever. But this is the new number 3. Is everyone clear to this point how this was the old 3 and that it shifted up to this point and was still a valid number 3 right here? Is that clear to everybody? Oh, thank you. Guys, the swing long has triggered, by the way, on the on the charts. I'll cover in a second. I'll go back and put it in. I'm not trading. I'm not trading right now, so I'm not going to worry about the swing longs. Thanks, Bill. Appreciate it. So this becomes the new 3, and this is why I would have gotten stop break even had I taken the Globex high, right? So let's go back to Happy Land for a second and pretend like I got filled here, right? Just like here, let's say I take my first scale at 5 points. I take my first scale at 5 points. Let's say I have either 4 or 2. I'm going to donate these 5 points to the 2 remaining contracts back up here, moving my stop back like this, right? My original stop was 2 points behind. I've now financed a risk-free trade for a shot down, right? But how am I changing my scale now? Well, let's look at the stretch. How far are we stretched intraday and from prior day's close? So when I look at that intraday, I see swing low was roughly, let's call it 1950 for sake of conversation, or at 1972, 25 points worth of stretch. Prior day's close was roughly 1945. So 1945 to 1975, roughly, almost 30 points. It's a huge stretch, right? What's the rule prior to the volatility increasing? Anytime I'm over 20, I know I have a huge odds of getting at least a 10-point trade out of that, and I'm going to press my shorts at that point, okay? This is my entry number 3. I'm going to look. I'm going to move my stop to net break even. And what am I targeting? If I have one contract, I'm going to target roughly 10 points. So from 72, I'm going to look for 62. I got that within an hour, right? If I have 4 or 2 contracts, doesn't matter. If I have 2, I'm obviously going to take 5 and 2. I made 10 on one contract, 5 on the other. That's $750. Odds are, if you're only trading 2 contracts, you have an account that's less than 20K. That is almost a 5% return on a 20K account, a little bit less. And is it, the amounts increase as you go down. If it's 15, it goes up. I'm awful at math, so I'm not even going to worry if I'm getting those numbers right. It's a good day, right? If I have 4, I might be taking 1 at 10, and then I'm going to go, hey, where's the next area? Well, I know all of this is poorly auctioned. I'm probably going to take a shot and see if we can tag at least this 1955 down here, right? I'm short from almost 1975. That's my next target. With the 4 contracts, I've taken 2, right? Move my stop to net break even, 1 and 1, right? That's how I'm going to, and that's why I'm going to press from both number 3s. And you're not done. I know when I got this trap back below on entry number 4, right, that I'm extremely pumped at that point. Because I know when I get this trade number 4, that I have huge odds of us going to the other end of the range and maybe even lower, okay? And I'm going to immediately in my mind, if I'm short from here, I'm going to get very calm and very still and know that this trade has a good chance of pushing, okay? Again, if you took all your profit right here in trade number 4, no big deal. That's fine. But don't try and renegotiate all the way down this trade all the way through here, right? Just sit patiently. Now, on the other hand, if I were a scalper, right? Well, I'll cover that in another webinar. Let's forget about the scalping right now. That is how I would handle the 1, 2, 3, and 4. And this was entry number 4 right here. And by the way, guys, here's what happened on entry number 4. Wait, on number 3, why I'm not taking it? What's that, the trade right now? Robert, is that what you're asking me? Oh, it's non-farm payrolls day. I usually don't even trade on non-farm payrolls. But it's OTF comes out on non-farm payrolls, and it's a dangerous. I've lost more money on non-farm payroll than almost any other day over my 20 years of trading. So I skipped the first hour completely. I could care less what they do. I tweeted that out last night too. I don't trade non-farm payroll. So that's my 2 cents about that. I will trade out to the first hour if something sets up, but we're just chopping around. Nothing's even happening right now, right? I realize there's a range, but nothing's really going on. And I'll just wait patiently till after the first hour and see if they set something up. And if I don't make a single trade today, I'm fine. Remember what we're trying to do. We already have huge odds, right? Look at the trade we got from yesterday. If you executed this correctly, okay, you had a trade from potentially from 73.50, if I could have gotten filled Fantasyland, right? 72.50, right? All the way down to 45. That's 30 ES points. That's, what is that per contract? $3,000, right? Even if you got half of it, it's 1,500, right? From entry number 4, which was right here, 1965, you had the potential for 20 points, $2,000 a contract, on a day where I didn't have to worry about institutions running me over. So why mess with this today? I just don't have a very compelling reason. They're going to have to give me a good reason, because OTF means other time frame, and they don't care about support, resistance, or much of anything else. They'll just run you over. So I increase my odds by staying away when the odds are lower. So this is my entry number 4, right? And this is what happens on entry number 4. People get entry number 2, 3, no problem. They have relatively tight stop. People took entry number 2 because there's only a 4.5 point stop. This entry, right, was right here, 1965. Is that right? Yeah, 1965. The stop was 1 point above here, which put me at 1974.50, right? So people went, wow, that's 9.5 points. I'm not taking that trade. Now I want to point something out here. You may, right, only trade 2 contracts. If you trade 2 contracts, right, and you use the proper stop here on this zone, it was 2 points behind the back of the zone. So your stop was originally 76.50. Let's say you entered at 72.50. That's 4 points. That's $800. Right? Is that right? 4 points? That's right. $400 you were willing to risk on 2 contracts, right? From the front to the stop. So when you get here, what's going through your mind? Because we all do the math really quickly, right? So my stop's 9 points. That's roughly $75 more than your normal stop. Instead of being $400 of risk, you had $450 worth of risk, roughly, on that trade. If I'm doing the math right, I may be off. This is important. You may say, you may look at this trade and go, I simply cannot take this trade right here. You may go, it's a no-go for me, right? You have 2 choices for that entry number 4. That's fine. Now, usually the reason I find, obviously if you trade 4 contracts up here, right, you can cut, if you had to 1 contract right over here. Pretty easy, right? But what I find people doing is, instead of wanting to cut contract size, they are insisting that they keep their same contract size on, right? And just going, I can't take the risk. So there's another option. There's a option 4B, essentially, right? And that's to take your 50-60 retrace, right, from here to here, and then you have to continuously drag it down, right? And that 50-60 retrace becomes your entry. Here's the problem with that, is that A, according to my own numbers, that only occurs from an entry number 4. Less than 30% of the time do we get a 50-60 retrace. So you miss the majority of the retrace. Of the times it does hit the 50-60 retrace, right, it's actually a negative sign, right? It's fine. It's a normal part of the deal, but the strongest moves do not have it. In other words, even if the trade ends up working out, what ends up happening is it peters out. And we're going to have an example of this in a minute, right? It comes back, it hits the 50-60, but then it tends not to really have a big break to the downside. The best trades on this come down, trigger, trade sideways just like we did here, and break lower and cascade down. That's how they work. So it's okay to say, I cannot handle a 10-point stop. This 10-point stop will go away as soon as the rotation size decreases and the range of the day decreases. And you may have to wait for that if you have a smaller account, because it's not just whether you can handle the stop financially, it's also psychological, right? There's 2 sides to it. You may just not be willing to tolerate the pain that it takes or the discomfort it takes to go up there with your small account, right? You have to visualize it actually working against you, and you have to visualize it actually stopping you. And again, the secret to the number 3 entry and the number 4 entry are all the same. A willingness to do it over and over and over again. And it's what kills a lot of traders, okay? If I had a small account, I can tell you what I personally do. I would drop to 1 on this entry number 4. I know my stop is 10 points. I'm going to shoot for a 1-to-1 risk reward, 10 points on the downside, and that's how I'm going to get paid. But I'm going to do it the same way every time, and specifically when I say every time, I'm going to do it the same way 10 times in a row so it becomes ingrained. And then I want to show you where it doesn't work, and then I want to step through and do the P&L on this thing, and we'll end it. Okay, and that's here. So without going through every step, we get a new entry back over here. Okay, and the entry goes like this. What time was that entry yesterday? Let's see, was that at, hold on a second. $11.55. That's this bar right here. Okay. This is my new swing long. Here's entry 1 and 2. I'm not going to draw them out. Clearly they got stopped right out of the gate, right? 1 and 2. Okay. So where's my next entry on this? My next entry is entry number 3 right here. Okay. I would say when it came within 1 tick, that was the first test of the area, I would have taken it. Where's my structure to get an entry? Well, my trap number 4 right now on this thing is sitting right here. Okay. I don't know what color. We'll just make this gray for the sake of conversation. This is my entry number 4 right now, right? Obviously that never came up. You can see that the machines knew exactly where that trap was. They didn't take it. There is no, first of all, so let's go through it again. If you're a small account and you're not taking 1 or 2, which I wouldn't, you did not get stopped here. I didn't take that trade either. I did not take 1 or 2 there. I wasn't here to take it. Let's move this down. I'm obviously running out of juice a little bit here, but I think this is important enough I want to cover it. Where does the trap occur now? The trap comes all the way down right to here where we have structure, right? So if you look, this triggered from a number 3 entry. I realize it missed by a tick, but the zone's tested, right? We rotate from 48 essentially all the way to 58. This is a 10-point rotation. And then we come back and we have a 50-60 retrace. And you can see that on that 50-60 retrace, it gave you a tradable move back up. For how many points? Not many, right? The 50 was at 53, and we rotate to roughly 55.5. It was small. This is exactly why, although this is not an entry number 4, this is an entry number 3. This is exactly why we're looking for the specific entry number 3 and not trying to negotiate it, meaning I sell it here and I try to reload here. I disagree with that strategy in general, trying to use that 50-60. Off of number 4, it's different. But off of number 3, you have to have the rotation size. The mere fact that we only went 10 points relative to 30 down was also concerning, right? So what I'm really looking for here is an entry number 4. This is not a valid entry number 3 because the zone's already been tested. This would have been a valid number 3, by the way, because it was Globex low and it wasn't untested, but this was not. And by the way, this is kind of bad luck, the way that it all kind of collapsed all within it, on top of itself with Globex low. That doesn't happen very often, and I might have even should have gone in and eliminated this zone, but obviously it was a valid support resistance area, right? We got reactions from it 2 times before it finally broke on the 3rd time. So that's confirmation that I had the zone correctly. It's just a matter of psychologically was it attractive, right? But what is important here is there's still a trap number 4 to occur, and if you look as we're pushing down, this becomes trap number 4. You'll see it never traps, and then we get one more. Where did I end up taking this trade? Right here at 1952. I needed one more bar right here, by the way, guys, while we're going looking at it specifically. I usually want 15 minutes, and I want the bar. I want 3 close bars so I can draw a line underneath it, like I was able to do here. See, I had 1, 2, 3 points that served it as the trap, which is why I took the trade here instead of taking the trade here. Some people ask me about that. The reason for this is too often when I only have 2 bars to draw the trap point off of, I end up getting a break to the downside. So 3 bars keeps me safe. I go with the 3 bars, and yeah, it's uncomfortable as hell taking the trade again. What's the stop here? The stop was from 1952 all the way back here to 1944 was the stop. The swing low was at 6, 7, 8 points from this entry. Now, yesterday afternoon, I want to point 2 things out. First of all, if you look at this 50-60, again, when the trade actually makes a 50-60, most people think, that's my entry in. But a lot of the time, right, see how the 50-60 kept getting dragged back out, right? I don't really even want it to hit the 50-60, and if it closes behind the 50-60, it's actually dangerous. It doesn't invalidate the trade for me, but I would rather have it look like it did on top. So yesterday held 2 keys there, and I'm not sure if I'm getting sick or I'm not feeling well, but I'm running out of energy. So give me a second here, guys. I want to show that makes this distinction. Notice we never get a 50-60 retrace here, right? This is a sign of a very strong entry number 4 that's really going to extend. Once we got this 50-60 back, so you'll notice as we're trailing up, the first time back on this 50-60 off of trap number 4, right, it actually occurred, let's see where that occurred. Dun, dun, there's the trap. It actually occurred right up to the bar. So let's blow this up for a second. And this thing is so long, I'm not even sure I'm going to post it on the internet outside of to you guys. Okay. If you look here, here's where the trap occurred. So this is how the 50-60 is supposed to work, right? This is the bar the trap occurred on right here. There we go. Here's the bar the trap occurred on right here. We never got a 50-60, so we're going to continue to drag this up until we can get a 50-60 retrace. I'm going to follow this. So look, no 50-60. Here we come. Here's the first 50-60. Now notice, out of the first 50-60, right, this is nitty-gritty. This is why it's taking so long, and it's not any fun to go over this stuff. This is what most people just zone out on and go to sleep, because they can't handle doing this nitty-gritty, but then they want to make a lot of money trading. This is where the lot of money trading comes in, right? First retest of the 50-60, 1951 gives you a rotation all the way back up to 1955. That is your B entry. Notice your B entry because, and Mari, if you're still in the room, is a perfect example of dragging the 50-60 up so that by the time you got the 50-60, you're essentially almost at the same point where you got the original trade. It was a 1 point difference, or 3 ticks difference actually. Okay, so here's another point. We really never wanted it to get past the 50-60, but someone asked me, I think it was Robert, yesterday afternoon, why I didn't kick it when we just closed behind the 50-60, and the answer for that is I still don't know that this trade's going to fail. I just know that it's better that it hadn't hit the 50-60 a second time, okay? It doesn't matter. I'm going to go back to this again. It doesn't matter if you make a rule that says one time back to the 50-60, but if it's the 50-60 the second time, I close the trade out. That is fine. Just do it the same way every time. And then importantly, guys, if it does this and then shoots up for 30 points, don't beat yourself up and don't cry about it. Go. You should always go, which I have right here every day. I've reviewed my trading plan. I've written my notes by hand, right? I have it written down in front of me exactly what I'm going to do. And I'm going to repeat that same pattern every stinking day, including today, right? So this way, when things start going wrong on me or I start getting a series of stops, I know it's not me that is effing up that trade, that something's changed in the market. So I don't have to waste time going through what I'm doing, because I'm doing the same thing almost every single time, right? As close as possible. So I can go back and put all my energy into what is the market doing? How is it changing the face that it's presenting to us, right? So let's go to, let's get rid of this drawing here real quick. No, it wasn't off that. Okay, so someone asked me why I didn't stop out here. And I'm going to give you the one very simple reason, an example. Because the prior afternoon, given I did not have a swing long take effect. But let's pretend for a second that we did have a swing long for sake of conversation right here. Let's pretend we got it right here on this bar, just for easy conversation, right? And we had the trap, so we trapped in right here, right? And so I'm looking, I go, okay, trapped in, I'm going to do the 50-60, and sure enough, I get my 50-60 right here, right? Mission accomplished. Well, look, it came back to another 50-60. So, assuming, right, assuming that you're having that rule where you're going, well, if it went behind the 50-60, why did I close it out? Well, here's a perfect example. We go behind the 50-60 retrace, right? Whoever it was would have stopped out there, right? Notice the ratio is stop to profit at this point. What am I trying to avoid? If I close the bar at this point, it's 1950, right? My stop is 1950 and a quarter, right? This is where my stop is, right down here. And where does the trade go from here? If we look, right, it proceeds to move all the way up to 1948. So my exchange here, right, and also keep in mind, if I entered the trade here at 1920, at 1928, already I've taken one scale off. I've taken some risk out of the trade, right? My stop and the swing low still haven't been penetrated, and I've sacrificed, I've taken out and I've avoided taking from my original or from this point, right? At this point, I've essentially avoided 4 points worth of stop maybe, and I have donated from 1919 up to 1948, 28 points worth of stop. That's a negative 5-to-1 RR. That because my fear was getting stopped. The reason why I want to cover that is this. Yes, I took a stop yesterday afternoon. Yes, it sucked. I did not like getting stopped yesterday afternoon. But there's too many days. At the end of the day, I know a couple of things. First of all, I know this. This is the most common pattern in the market. Right? We tend to close back in the bottom third to middle half of the range. The 50-60 was sitting up here at I think 1962, if memory serves. Okay? And if I get scared about this stop triggering me after I've had a number 4 entry, which is my highest odds trade, and just finished giving me a 30-point swing, right? I will never, ever, ever capture 30 points on the second half of my trade, and I did that multiple times. Now, if you have a small account, and you say if it comes back to the 50-60 the second time, I'm stopping out, that's all right. It's okay to do it. Just understand, for me, I don't have a small account, and I'm not a new trader. I've been doing it for 20 years. This is never, ever going to scare me. Is it going to piss me off? Yeah, I don't like getting stopped out, right? Especially when it shoots up to 54 right after it stops me and gives me a 10-point rotation. I did warn late in the day that it's end of day. Anything can happen, and anything did happen. In this particular case, instead of getting the shot up, right, if you remember just a couple months ago, right in front of non-farm payrolls, we were having massive short covering squeezes, right? It didn't just pan out that way, but I don't spend all my time trying to figure out something I can't know, which is it going to come down and stop me, or is it going to shoot up for 30 points in the afternoon? That's how people become basket cases in trading, is they try to sit there and predict the unpredictable. Your odds of calling where the market's going to close are so amazingly low, and I don't know almost anybody who can do it. The one I see who gets closest to it consistently is FT71, and even he gets it screwed up a bunch of times. He could never make a living off of predicting the close. Okay, I do know that I traded this long enough that this is the pattern. Okay, and if I get an entry number 4, I'm going to bank that this is the pattern the majority of the time and take my losses. So let's do one more thing while we're going. I know this has gone on forever, but it's important. Let's see if we can figure out. It's not what I wanted. Nice. Let's see if we can go back and figure out what the P&L was off of 3 and 4 if I trade well, let's just make it 2 contracts, and because it's 3 and 4, I am either using 1 or 2 contracts, right? Obviously at entry number 3, I'm using essentially a 2-point stop behind the entry point, and I'm going to use a 5-point target for my first scale, and then I'm going to use a 10-point target for my second scale off of that entry, right? And let's see how that might have looked, assuming we didn't know this was poorly auctioned and it was just a zone, right? So I come up, I get my entry number 3. I already know I didn't make any money here, right? Because what I'm going to do is move my stop to net break even and get tagged out. I did not take entry number 2. Why am I not taking entry number 2? It's not high enough odds if I have a small account, or if I have a new account. I need to build cushion, right? I might work my way into number 2 later, right? But I know my odds of getting stopped are much higher here than they are here or here, right? That also means, by the way, that you have to put in that there's going to be some times where we get an entry number 2, it shoots down and you didn't get it. And you're either going to, and understand, and I'm talking to y'all directly, it's all right if you're going to take number 2 and get paid every time. In my eyes, it's not all right if you're going to take number 2 some of the time. And the reason to take number 2 is not because the stop is 4 points. As a matter of fact, I would argue that's a stupid reason to take number 2, because the odds of getting stopped here are so much higher than the odds of getting stopped here and here. I can't even begin to discuss it, right? That's how crazy it is. So I come up, I take entry number 3, right? I'm going to put on 2 contracts. My first scale is going to be 5 points. I take 1968.75. Let's pretend magically I got filled at 1968.75, and I'm going to take 5 points. So the first question is, can I get to 1963.75? Just barely, okay? Just barely. And the reality is that I probably am going to get stopped on this trade if I said exactly 5 points, right? I don't remember if I said 4 or 5 point scale on this thing. I think I actually narrowed the scales already, but let's say I said 5 points just for sake of conversation here, right? I'm shooting for 5 points from 1968.75. Do I get to 1963.75? I do, but I probably don't get filled, realistically, right? So I'm going to stay disciplined. I know that 50-60 is normal, right? Comes all the way up to 50-60. Doesn't work. I'm going to get stopped for 2 points behind. I'm now down $200 on this trade when I get stopped right here, okay? Everyone got that? We're down $200 because we didn't take a scale for whatever reason, okay? It didn't hit. Maybe you had your limit in, you did it perfectly, it just didn't fill. I think I had a smaller scale yesterday, but I don't remember at this point, and we'll just go off of 5s. I get up to this next number, this next area, and instead of doing it the way Simon did it, which was not very bright, I just take the front of the zone like it's supposed to be, stop 2 points behind, that's 4 points. That means I'm going to lose $400 on this full zone trade, right? Given I've already lost on 2 contracts, right? Already lost $200. So see what's going on here is you're getting scared psychologically. So you get stopped again, you're down $600. So the question to ask here in your trading journal is, can I survive doing this series of trades over 30 occasions? That's what you need to know. Does this actually pay or does it not pay? That's what you want to know. I take this trade. Let's say I decide I can handle losing $600 in my account on 2 contracts, right? Take this trade. I'm doing the same thing again. I'm targeting 5 points. I entered at 1972. My first scale is from 72 is 67. Okay, do I get to 67? I do get to 67. I get my first one off, right? Notice I'm not trapped. I don't have a trade number 4 yet, right? Okay, now I know I have an entry number 3, and in my mind I know I had the potential for a 10 to 20 point trade here. And you're going to have some conflicting things going on here. First of all, you're going to look and go, you know, if I take this whole thing, I got 5 points, that's $500. I lost $200 before, I have net $300. Okay, again, that's fine if that's what you're going to do every time, but you're losing track of what the opportunity is here. By the way, that swing long worked, and that's good to know, okay? Meaning what's going on in the market right now. It's good to know. You should, even whether you take the trade or not, constantly keep track of where the swing longs and swing shorts take place, because you got to build confidence in your mind to be able to take it the right way. So for me, I'm not worried about the dollars in my account. I am, but I know that if I take care of the trade properly, the dollars in the account will be taken care of. So what I'm doing is I'm taking one off. I'm donating it to this contract, and I'm moving to net break even because of the stretch that we're on, right? Which means now my 1972.50 entry now just became a 1977.50 entry for net break even, right? And I have plenty of room. That means at this point the market has to move 10 more points up to crush me. And I know the next thing you're thinking in your mind, because I've thought all of these as I was learning to do this for myself. I'm like, well, it's going to come all the way up and stop me, right? So here's what you can't do. If it comes all the way back up here, you cannot freak out and take that trade off. You just totally screwed yourself if you do that, because it could come all the way back, right, for a retest and then tank. You have to be committed to the trade from beginning to end, whatever you're going to do. If your trade plan said take both trades off there, do it every freaking time. Don't sit and try to figure out what the market's going to do. I had no clue when I took this trade yesterday. Where did I take it? Right here. Oh, 1, 2, 3, 4. Yeah, when I took the trade right here, I had no clue that that trade was about to be worth 30. And you know why? What I would have done if I had any clue, if I even thought there was a 60% chance that we would roll down 20 points from there, I'd have said no scales for 20 points, right? Because I'm not an idiot. I had a truckload of contracts on. I would have gone no scales at 20 points, take your money, or 25 points, take your money. And I also would have gone short the daylights out of it at 1972.50. I would have said, guys, this is it. Borrow money from your mom, dad, uncles, kids, wherever you can get it, and back up the truck at 1972.50. This thing's going to drop 30 points. We're all going to get rich. But I had no idea where this thing was going to go. I just simply knew I was set up well to get paid. So at this point, I'm either bringing to break even or net break even. Again, does not matter as long as you're comfortable and you can repeat it over and over. And then on that second contract, I'm probably going, hey, I just got a trap number 4. I'm pretty confident in the ranges we're having. I can get 10 points, right? I just got whatever this was, 5 here. So I'm just moving down another 5 points. So from 1972.50, I'm going over here to 1962.50, and that's going to be my target for the day. And then I'm going to wait for the next swing to set up over here. And the only thing that was okay to audible on here was we got so far and so deep into the afternoon, and I believe it was at 2:20. I said, it's the end of the day. We'd already gotten 2 scales off of this trade, and I said it's okay to close the trade out. The end of the day is very, very difficult, but don't close it out before it hits the stop. Either close it at break even on balance, right, or ride it. I had chosen to ride it. I got stopped on this trade, and I'm totally fine. If you look, if you look the same way, right, if we had applied it with a small account, here's your trap, right? Could have I taken it? What was my stop? 8 points for $800. It's a big stop. Oh, I know what I would have said here, by the way. And then let's go back and look at it one more way here. Let's say I'm trading 2 up here, but let's say we don't get a number 3 entry, because sometimes we don't, but we would have gotten the number 4 entry here. My stop here on 2 contracts was $400. My stop on this trade from 1965 to 1974 was almost 10 points. That's $500. On what I would have done here is taken 1 contract, used my correct stop, right, and I would have targeted 10 down, 1 for 1, and here's the reason why I would have done that. This ratio works enough of the time on a risk-reward basis. It's more difficult emotionally, but if you're going to take this trade, that's what you have to do, lower your trade size. I would not have said, I'm going to increase my risk dramatically, right, on this trade. There's one more option in this, and Maury, you exercised it yesterday. I'm not going to go into this because there's still so much to cover here that we haven't even touched on, right? But this is, you could use the binary options on trap number 4. It's exactly what they're built for, right? If you sold them 20 points out of the money with an hour left to get, essentially 3 hours left to go, you easily got paid, and I think you did yesterday get paid on the binaries. A couple of people got paid on the binaries yesterday, right? That's another webinar for another time. The point being, you could have taken this on 1 and still had a 10-point win. That's $500 in a small account with the proper risk reward. That is not that different than taking 2. The difference is you can't take the initial scale that most people like to take. and you still would have ended up with a 1-to-1 on the swing. The point being that this 3 and 4 entry are so powerful, and let's see if we could have executed that same idea down here, right? So what would have happened in this scenario? You took this trade here, right, at 1952. The best scale you would have gotten would have been 1957, not even quite 6 points. But what I would have adjusted to this on one point was, again, when I gave that warning, it's the last half hour of the day, and we hadn't achieved a 10-point rotation, that's where you just come in and move your stop up to break even on one contract and go, I gave it a shot. If it works, it works. If it doesn't, it doesn't. But there's less than 40 minutes left in the day, and I know I'm due to get hit. And if you notice, the other way to handle that, again, there's one more way. See how each of these swing longs picked up? The other way you do it is go, I'm just going to put the stop right behind the last, behind what would have to be a new swing low, right, and break the pattern of new highs. And that's where I would have put the stop. But even there, that would have stopped you right before it jacked back up to 1954. So that's my 3 cents. This was a valid entry number 3, by the way. It was within a tick, right? And again, it would have been a more structured way to enter the trade, and it gave you a 10-point rotation up. Remember that, right? So any questions? That's how I was going to finish it off. That's how the day would have looked. You would have ended up having a beautiful day no matter how you did it, as long as you focus on entries 3 and 4, right? And in both of these situations, 3 and 4 gave you viable scales, and I think this trade would have worked if it hadn't been the day before non-farm payroll. My guess is you would have ended up with an 8 to 10 point scale up here. That would have been the 50-60 retrace from 52 to 62 was the 50-60 from swing high, and I think it would have hit it enough at the time, right? I was really, the only people who should have taken that stop yesterday should have been people who had deep pockets and a long time to profit in the methodology. Any questions about that? Now's the time to ask. And was that helpful? Okay, Mari. Well, you're going to kill the recording. And I think the most important thing out of all of this is repeatedly get your methodology down to the point that it's repeatable over and over and over and over, whatever you're going to do. The problem with most traders is the totally random function of how they interpret, view, and execute the market, and it kills them. Let's go look at today's market real